Well, good evening, all. Ira Epstein, and here we are with your financial market update. And this update is for Wednesday, and we're at the 23rd of April, 2025, and it's about 5:40 p.m. Now, we all talk about AI. I don't think any of you realize just how advanced we are. We use AI here for an awful lot. And in my production now, we're going to tonight be experimenting with new AI programs that we've written, we're implementing, so I can do these updates earlier. We ran into one snag. We've been working on this for quite a while, by the way. We've run into one little snag so far where it can't put up that thumbnail picture the way that we want it. But if it did, I'd be through recording, I'd sit at the computer, I'd put the file into a folder, and it would all automate. It would render it, it would edit it, render it, post it to the YouTube, and we'll even get to the point where it then sends out notices. A lot of you get that because you know that as we post, you already get that notice from YouTube, and some of you get the post from our website because you can go to our website if you're a member of our services, and from there, you can say, hey, send me a notice every time I repost something. The website sends it out. It's not a text message. It's one of those messages you get from websites all the time, and you can turn it off whenever you want to. So we're far along. Tonight's going to be our experiment with it. As you know, the president's experimenting with the U.S. public, with the tariff wars. Now, do I think this is going to be good? I don't know. All right. I read so much during the day from bright people that I just don't know. I think that the president will end up, as I've told you, with a 10% tariff on just about everything. Will he be able to keep these big tariffs? I doubt it. Have we hurt ourselves and shot ourselves in both feet with our credibility with all our allies? Yes. We're not a good NATO member. We're not the heck of the best of a trading partner, as you can see. I can go on and on. So we have definitely damaged the American reputation. And I hate the fact that here in Canada, Canadians don't want to come to America. They're fed up. They don't want to buy the cars. This is one of our closest allies in Mexico. And, I'm just a guy on the street. I don't like that. I want my neighbors, and I love the Canadian people, and I go to Canada, and I have Canadian friends, and you can't discuss politics because there's no winning or proving your point. I have no control over it. Why argue about it, all right? So we all go in, and we try to figure out, what do we do? Well, a couple of things that you do. Number one, understand that in the gold market, you had one of these fantasy runs that you see every now and then in your trading career, and the market just launched basically from the 2,800 level and went up to 3,500 and quickly is correcting a bit. The word is correcting. I don't know that the market's through going up or not. If inflation sets in, why is 3,500 the top? That becomes the big question. In the dollar index, your problem is what's a low number for the dollar index? I can tell you, we wouldn't be down here if we weren't in tariffs. We are still the reserve currency, and there's no other currency to replace it, but we're sort of a hated reserve currency, and if you don't believe that, you are making a mistake because that is how it is. There is nowhere else to go if you want to have a currency that is quote unquote, you understand the look of me here, stable, all right? We'll take it that way. On the energy markets, did the recent rally go up because of demand? I don't think so. I think it went up because the president just keeps slapping sanctions on Iran, cutting down its supply that it can put onto the open market, and probably Russia's next. I don't see Russia and the Ukraine doing anything. I think they talk the words, nothing gets done, and I think the U.S. is going to walk away from this. I hate to say it, but I think that's what's going to happen. And when that happens, the president probably hits Russia with sanctions. I say that because out of left field today, OPEC said they're having another meeting to discuss even more production coming on the market. Now, this market's, we're talking a U.S. recession. We might be in it already. People are arguing that factor. The world's in a tariff war, and they want to put out more oil. The reason they want to put out more oil to grab market share, and they must think some oil is going to disappear from somewhere. At $60 and under in crude, you got to be careful in the U.S. You probably shut down your production big time. I'm talking 20, 30%. Get to 55, you'll see even bigger numbers than that. So that's what I'm reading. That's what I'm reading in the trade and what makes economic sense, all right? Because you have to put stability in at some point. You're not going to produce the oil at a loss. That becomes the other problem. In the bonds and notes, they're just wobbling back and forth trying to figure out where do they go. In terms of news of the day, you're going to get jobless claims in the morning. The Federal Reserve National Activity Index from Chicago will come out at 7:30. Advanced durable goods data. Well, I wouldn't be surprised that they're up. People are trying to buy everything before the tariffs hit them. U.S. existing home sales data for March, that'll come out. Did you see the MBA numbers, the Mortgage Association numbers today? Disastrous. Yet, new home sales went up. Now we're going to get existing home sales. The EIA gas storage report, the KC Fed manufacturing composite and business activity indices out, and more earnings. And by the way, on the earnings, one of the things that's been going on, well, we keep hearing maybe they won't issue forward guidance, all the companies. It's sort of a mixed bag. You know, I didn't see Tesla doing anything for the next quarter, but I saw ServiceNow. I'm seeing some of the other companies. They are coming out and doing it. So it's a very mixed bag as to what's going on there. It's a rough time. When you and I look at the S&P for the week, it doesn't feel like it, but you're up 1.7%. Okay. I still question if you're going to take out this low. Obviously, you go into a full worldwide recession. You get into a tariff war that no deals are signed. You know, I'm just giving you the worst events. Why not take that out? Sign some deals, get some things done, and get a pattern going there. Why visit that again? Then the worst is probably behind the market because you know what you're dealing with. That's where I think you're at right now. You have a lower low and a higher high in the market. That's not a trend. The market is fighting a battle. As I said, I thought it would fight at the 18-day average. Tonight it's up a little bit. But even though you gap and went off the news last night that President Trump said he's not going to fire Fed Chair Powell, the market gave it all up. And by day's end, you were just sitting right over that 18-day average. And you're about there right now. And you've used a lot of power. You're in overbought territory again. So what do I think? I think that you're now in a trade affair market where it's day traders at work and they're hitting and running all day long. Good for the exchanges, good for brokerage firms, bad for trend traders. When you come to the NASDAQ, the same thing. You gapped and then you came right on back and hit the 18-day average late. I wouldn't be surprised that you hang there. No trend that I'm seeing. You're out of the downtrend, you're not in an uptrend. In the Dow, you rallied right to the 18-day average and couldn't do anything with it. And you did get up, and I give it credit in the Russell, got over the 18-day average, but it too's overbought right back at the end of the day on top of that 18-day average, unable to get away from it. I just don't see anything in those markets. Now in the DAX, which will come up here, as I said, when you do this, you capture shorts. If I can get this to move, I don't know that it wants to. It's not going to move for me. But when you take out the high of an outside day down, it's a trap play, especially when you close like that. Stop orders hit and the market goes. Ideally, there's two numbers it makes a run for, a Bollinger Band and a window envelope. I don't show the window envelopes here for reasons, all right? I want you to get my advisory services and see all that. When we look at the notes, all you did is keep rallying to the 18-day average and failing. So you have the pattern of higher lows, higher high, but it keeps going to that 18-day average, the line in the sand, and getting thrown back from there. The 2-year is just staying under it. So they're changing the market now again. So now what they're doing is you're dropping in the 2-year, you're adding a bit of yield, so it's going up, and the back end is the one that's slipping down. So it went the other way when you got about 40 to 60 basis points over from the 210s, and now they're back and forth in here is what's going on. In the dollar index, you now took out this high, you lost the bearish embedded reading. the odds favor, unless it re-embeds right away, that you've got a trade bottom low that was made today for a while. And the ideal part would be if the market doesn't re-embed, in other words, fall hard tomorrow and make the red line back under 20, that you might make a run wherever that 18-day average is. And the flip-flop would be true in the eurocurrency, which, by the way, it never did embed. It just got overbought and just fell back. That doesn't owe this level. That's why I have a question mark on the dollar. But I covered the dollar in my special dollar report that I put out. You want to see that, and it goes off our website tomorrow, Thursday. So be sure you go visit it. I'll talk about it right at the end of this. In the British pound, well, it's going to be interesting because the head of the Bank of England is going to be on, I think, tomorrow morning on CNBC for an interview. I think it's CNBC. It's Bloomberg or CNBC. I want to see it and what he has to say about what's going on. That's going to be very important. In Bitcoin now, I think this is the near-term resistance right now. You went up to the 100-day average and the Bollinger Band, got over it yesterday, and today you just couldn't go anywhere. So this was on Tuesday, Wednesday's action, and I'd expect that. But I am bullish, and I do think the 100,000 levers back in play unless something happens in tariffs and then everything comes unglued. And we've already learned this market is not a safe haven. It's just another asset class. Then we get to the energies, and I viewed this, and I said it every day, as a bear market rally that might run into big resistance at the 18-day average, and so far that's exactly what's happened. The same in WTI, no trends. All they did is a bear market rally into those numbers. And what you need in order to get natural gas to eventually come up is to lose the embedded reading with the red line closing over 21. Until that happens, I don't know how low this market can go, but it just keeps working lower. It's going to have its first resistance ideally at 337, and that's 20 cents away. That's a lot, but that's the 200-day average. It's now been under it 3.5 days. If either bounces now or this market can surprise you where it can go on the downside, I think it's right at the cusp of what's it going to do. Is it going to finish the week out in the toilet like this and then portray even lower prices to come? That's what you're dealing with, all right? So, as I said, the special currency report, my dollar report, it shows you where we're at in the price counts. I really hone in on these. It's very important because as the dollar goes, so much depends on it. Again, move your cursor up to the top up here. You'll see the icon there. Give it a click or just go to iraepstein.com. It's that simple. Look on the top left. You'll see it. It'll go off tomorrow, and I'm going to put up a new report. I'm probably going to tape tomorrow, and I don't know yet what I'll do it on, but I'll do it on something interesting. You have yourself a great evening. I'll catch up with you in the morning.